Wondering how the latest announcements affect your business? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And of course, off the back of a big announcement like the autumn statement, there's a ton of news to tell you about and tell all of our clients about. So I wanted to come on and do a video just about the small business highlights particularly. So in all these things, when the chancellor stands up and announces politically what's going on, what they're doing with the money and all the rest of it, there's a ton of stuff about spending and benefits and things like this. I'm ignoring all those completely, and I'm only telling you about the things that matter. So a lot of that's based around the tax and how it's actually going to affect your business finances, whether you're an employer, limited company, sole trader, doesn't matter. We've got it all in here for you. So watch to the end so you get all of the information that's relevant to you. But before we get into that, if you like these type of videos, make sure to click the subscribe button and the bell below so you get notified whenever we release more videos just like this one. So then, quick summary before we start of how I felt it went. So it's one of those things where actually politically it was relatively clever in terms of they didn't raise any of the main headline rates. So I'm not going to be telling you today about, there's the press are reporting tax rises, of course, and in reality they are rises because what they've done a lot is frozen things as they are, which means as people's wages rise, more people will end up paying more tax. But what they haven't done is change any of the headline rates. So we're not suddenly going to be paying more income tax through just the percentage changing or anything like that. What they've actually done is do the other way. They've cut allowances and made people pay more tax that way. So for a lot of people, say, who are getting paid in their wages normally, they're employed, they're not going to see massive changes to their actual wage package. Just how far does that money go? Albeit as they get pay rises, they might start to see that because the tax is being eaten away at the sort of the top end. So, and we'll talk more on that in a little bit. But from an actual overall point of view, it was being reported in the press that it was going to be massive changes. And I think overall, the small business owner did okay. Like, it's not as devastating. Some of the things being reported around changes to dividend tax looked like it was going to be horrendous for small business limited company owners. They never materialised. So actually, I think there was a bit of a sigh of relief, particularly in the office when we were watching this around TVs, that there wasn't bigger announcements. We all sort of looked at each other and went, is that it? So don't get me wrong, there's a lot of cost pressures in there at this time with everything else going on with the cost of living, but ultimately those headline big disastrous, devastating changes did not happen as far as we're concerned at the small business level. So let's kind of break down then where we're at. So I mentioned dividend taxation, so it's a good place to start actually. So if for most small business owners, what happens is they take some of their profits as dividend because it's quite tax efficient. It's been very efficient for years, and what's happened is they keep tweaking the rates to make it less efficient, but it's still better generally because of the way you can time your income. There's loads of other content we've done on this, so check all that out if you want the explanation of why. But generally, it's still better if you can remunerate yourself most of the time, depending on your income level and your circumstances, in a limited company via dividends. It's just you've already sucked up a 1.25% increase. So when they put out the health and social care levy, when they announced that, everybody was getting a 1.25% rise in effectively national insurance. So if you're employed, that's what happened. That's now been reversed, but what they didn't reverse was the dividend taxation change of 1.25. So although it's got nothing to do with the autumn statement, it's happened recently and it's still there. So you should bear that in the back of your head. That's already there. But then what they've done is, at the moment, every UK sort of taxpayer gets £2,000 dividend allowance. It just means that the first £2,000 of dividends are effectively zero tax. What they've done is they've cut that in half from next year. So it's now only £1,000, and then the year after it only goes to 500. So they've hit the dividends again, but not massively. What it does cut down is a little bit of, quite often the tax planning around limited companies is you'd have maybe you and your partner on there and you'd both be having a bit of dividends and making sure you're using both allowances. Obviously that's still there, it's just that the benefit of it's been chipped away at. So, you know, a little bit of a hit there for sure. And this is what we found over the years. If you actually look at the history maybe of policy of small business taxation over say the last 10 years, there's been a lot of these tweaks just keep squeezing the small business owner, and that's still kind of carried on with where we are, but it's not to a disastrous level. So that's happening. Dividend taxation, they're going to cut. So next year, you're going to see a slight increase in your tax bill, and the year after, you're going to see a slight increase in your tax bill for sure. Now, I mentioned frozen bands. This applies to everybody really. And what they did is they've said, look, we're not lowering the personal allowance. You're still going to get roughly 12.5k a year tax-free. You still pay roughly the first 50k a year is what they call the basic rate. So that's before you start paying sort of 40% tax for those who are employed or self-employed. And then they've left that alone. They've just said that's there. And again, it's kind of a stealth tax because as earnings grow, you're going to be paying more tax as a result because they're not moving in line. The biggest change was at the additional rate. And whilst I'm sure not a lot of, or 98% of the UK are probably not going to cry about this, there is, if you earn over 150k, which some small business owners do, you're going to be hit, because what they did is, if you cast your mind back to literally a few months ago, they announced, and then we did videos on this, they'd actually said that that rate, they were going to cut it. They were going to cut the rate so that there was no additional rate of tax. Everybody just paid 40%, which actually going many years back, that's what it was. This rate didn't really exist at that level. So they were just returning it, really. Didn't go down very well. Obviously, the chancellor lost his job. And we've done this massive U-turn swing where not only are they not cutting that 5% out, they're actually now reducing the band at which you start paying the 45%. So rather than being 150k, it's down to 125-ish grand that then you start paying this additional 45% tax rate. So it will hit those additional rate taxpayers. So that's there as well. And again, it's add to that wage inflation and everything else, they're going to be paying more tax. So that was a bit of bad news for anybody who's, I suppose, fortunate enough to be in that additional rate band. And on top of that, I suppose, what they've really tried to do is look at all the different ways people are remunerating themselves and basically getting paid and thinking, well, how can we get some more money from them? So obviously dividends was there, just generally additional rate people were having to contribute more. But the other one they looked at was capital gains. So, and this is relevant at a few different levels, but normally if you sell, say, property or shares or crypto, you're often subject to capital gains tax, and you get a separate allowance for that. So you get about 12.5k a year, generally tax-free on your income, and on top of that, you got £12,300 tax-free in capital gains allowance. And they've realised that maybe at a time where we need to squeeze everything is a bit too favourable. So what they've done is they've going to effectively almost half that. So it goes to 6,000, then 3,000 in the coming years. That's going to hit you if you're going to be doing that. So again, if you're thinking of selling anything like your buy-to-let soon, during this tax year is going to be the last year in the foreseeable few years where we're going to have this decent allowance. You might consider bringing it forward. There's all those kind of things to think about. But yeah, just know that it's going to half. The big change to that I see as an admin point of view is it will bring a lot of people into having to do a tax return, because at the minute, if you only sell a few things and it's all under 12k, so let's say you do a bit of crypto and you made a few bits of crypto profit, it's all under 12k, you haven't done more than say 50k of actual sales in a year, you don't have to report that on a tax return. But now that band being so much smaller means a lot of people might have to think about filling their tax return. So do bear that in mind if you are selling things. Now, a lot of these cuts I've mentioned happen from April 23, the April coming, and a lot of these things go on till supposedly, like at least 2028, but whether the party will still be in power to actually impose that, we don't know, but many of those limits are there. So bear that in mind as well, that this is for quite a period of time. So let's talk employers for a second. It's not very well known, but actually what happens is, as an employer, you pay national insurance on someone's wages when they earn over a certain level, and that level is £9,100, and they're sticking at that level. Now, the reason that's important is it's actually lower than when the employee pays national insurance. So they did this for the whole cost of living idea. They increased the national insurance sort of point where you pay national insurance physically in line with the personal allowance for normal individuals. That's great, but the employer still had this lower limits. They started paying national insurance earlier, so they contribute to the pot at this lower level, and that's sticking for a while. So you're still going to be in that case where if you're thinking about planning about taking someone on, or you've already got people, you've got to plan in your budgets that, that's the limit that you're going to start paying national insurance on your team. So bear that in mind, that's not changing. But the good news, and there is some good news, is they did keep the employer's allowance, which I think is one of the most impactful allowances that's available to small employers. And if you don't know what that is, check out our other videos, just Google employer's allowance. And that gives you £5,000 off of that national insurance bill. It's not repayable, it's like a limit. So, but your first £5,000 effectively, if you qualify, is knocked off that bill. Massive deal for small businesses. So that still exists, and I'm really pleased to see that. And the other thing from an employment perspective is the national living wage that's payable to over the 23s is going up to £10.42. That represents about a 9% increase. So that's pretty beastly. And actually that living wage has been a real issue for a lot of small employers for some time since its introduction, because it's not that they necessarily, employers begrudge paying that. It's that what it does is if you've got people historically on certain rates and certain bandings, if you imagine, let's say someone's a difference of £1 an hour between the living wage person and the next one, is when they're bumped up, you then are like, okay, well, that's eroded the gap between the next person. And so it ends up causing you a problem where you have to bump everybody's wages up. So it can be a real challenge for a lot of small businesses. And I think there's this idea that small businesses are like the Amazons of the world. The owners are rolling in money. And I can tell you, 16 years of working with a lot of small business owners, in the vast majority of cases, it's just not true. and that erosion of profits and everything else is a real problem. So that's coming. So it's good news if you're not being paid at that rate, because you're going to get an increase. But for employers and the business owner that we're talking to right now, that's a challenge you've got to be aware of. And of course, on top of that, you're normally paying pension on top of that, and you're paying employers' national insurance. So it's a complete cost increase there. So do bear that in mind, but you do have the 5,000 employers allowance still there, so that's a little something to take away. It should also be noted that other minimum wages, not just the living wage, are moving up, somewhere between 4.6% and about 10 point something percent. You've got increases in all the different bands, so again, that's going to affect you if you're paying people at and around those levels, so do check those out from April next year. And then we get into a couple of other things. So if you've got premises, you might well pay business rates at the moment, and it's one of the more difficult things. It's not very clear in the policy document to understand, but there's a good and a bad element to this. The bad element is they're going ahead with revaluing properties. So you pay your business rates based on its rateable value. They're revaluing those. And obviously some of those are quite old, so you'd expect the majority of them to move up. Not everybody's, but you'd expect the majority of them to move up. But they're freezing some of the multipliers on it that calculate the actual bill. So you'd expect a raise in bill, but they're saying they're committing 13 odd billion pounds to a support package to sort of ease the transition. The details on that are light at the time of recording, but that's where we are. So it's good and bad news. They realise it's a problem. And actually, reading the autumn statement documents, they seem to be spinning it that actually it's going to bring some people out of business rates. So it'll be interesting to see. I think we'll just park that one for now and say I'm unsure whether it's good or bad, but it's certainly on their list. And if you look at like the Federation of Small Business, a lot of these business groups, they've been lobbying for a business rates reform for some time, because honestly it is a really hard tax to deal with if you're a small business and you're in premises, because it's just an overhead that you just don't want, basically. It really can hamper that growth. And then two more things for limited companies we had before some good news. What we have got is we've got a research and development tax credit cut. So if you're in the small business world, there's a chance you will have come across research and development tax credits. And actually, it's one of the videos we don't have on the channel, and we really should, because in the right circumstances, it's an amazing tax credit, repayable tax credit, can give you what feels like free money in the right circumstances. The problem is fraud is massive in this area. You have these aggressive companies phoning anybody and anybody, telling them they can get them a research and development tax credit. And we've seen it with our own clients. They're talking to us about, oh, there's no way you're getting a research and development tax credit. It's just not happening. But people are phoning them, telling them they can. And we're seeing massive fraud. There's been hold-ups of payments at Revenue and Customs. Revenue and Customs very much know this area, and they're looking into it. And it was even mentioned during the statement itself. So that's happening. But what they have done is cut the tax rate from 130% to around 86% on the main claim. So they're trying to like equalise the different schemes. There's various different schemes, but ultimately there is a cut there to be had. And more on that, I think at a later date. I think we'll probably do some separate content on that. But if you're into your research and development tax credits, just know that's probably dropped a little bit for you moving forward. And then the other thing around limited companies and tax credits, if you like, is at least that's how people see them, is around limited company cars and electric vehicles. I saw some press today actually with people going, oh, there's no point in having electric cars anymore. The government have ruined it, mainly because they will become effectively road taxable from 2025. I don't want to talk too much about that, because actually if you look at the detail, it's a tiny amount. So there's still definitely a reason to look into that. But from a taxation point of view, they're still very attractive. They attract currently good reliefs when you buy them. But the main thing is cars inside a limited company are awful. And I would go check our other video out that we've done on this for more details. But electric is you have to pay like a benefit in kind charge, I suppose is the easiest way to explain it, on company vehicles. And on electric, it's really, really low. And it's still going to be low, but they are increasing it 1% each year. And I think if you've listened to me for any time, I always say with cars, they've done this historically forever, is they give you a really good attractive rate and then they slowly eke it up. But it's still going to be worthwhile if you're thinking of doing it. So but do know that benefit in kind is going to increase, but it's not massive enough to be really, really concerned at this point. If you are one of those people that has a non-electric car in your limited company, again, they're also eking the rates up on those, which they do all the time. So, I mean, it's normally incredibly expensive to have a company car provided to you. And you always have to weigh up whether it's right in your circumstances to actually do that, or do some alternatives that are possible on that. So, but yeah, again, note that charge for the benefit in kind, the percentage that's applied to that effectively generates your tax bill, is moving up 1% each year. So I suppose that's most of the bad news out of the way. So we did mention some good news in there in terms of this support package around business rate transition. That'd be interesting. More on that is to see whether it is really good. So that's there. And the one thing you have got is you have got some sort of certainty with planning, I suppose, presuming that the Conservatives stay in power, because they haven't moved any of the rates. Not like this constant, because what used to happen for years, you'd have this constant yo-yo of rates to consider, but at least we know what the bands are. So I suppose certainty is in there. You've got the employer's allowance still in there, which we already mentioned. Now, on top of this, the other thing you've got, and when we're talking about certainty, is VAT. So in the UK, you don't have to be VAT registered from day one. You can do your first £85,000 of sales without having to register. That's a massively high threshold throughout the world, and that's staying. They did talk a few years about cutting that down. And again, some people would say, oh yeah, but with price inflation and everything else, it's obviously bringing more people into VAT. And yes, that is true, but it is massively beneficial anyway. So, and if you've got any aspirations of being a competitive business, you're going to have to be in the VAT anyway. So it's always like a successful point, I think, when you reach there and you're like, yes, I've made it, I turn over enough to be VAT registered. It's a challenge, but it's also kind of a coming of age, I guess, of your business. So, but that's staying the same, and I think that's a positive thing. So for me, that's good news. If you're in the import market, there is about 100 products that are having a tariff removed. So check that out in case it's one of the affected products for you, but that's there, so that's good news for importers. And so we've got importers over there, and then we've got digital people. So the governments across the world have been talking about for years how to deal with this fact that you've got these digital businesses. Where do you tax them? How do you tax them? And everything else. And there was this idea that we would do an online sales tax, which is just an awful idea in practical terms, because so many businesses, depending on the business model, it just would make them unprofitable and things like this. They finally said in the small print they're scrapping that. So if you heard anything about online sales tax or OST, the idea has been scrapped. Very happy to see that, because practically I just don't know how they would have applied that and that made any sense. So that's gone. And then finally, it's not really a tax thing, but there's a real problem with small businesses at the moment is most people can't find staff. There's a constant thing. You talk to anybody and they're like, I can't find people. Where are they? It's just difficult. And what the government is seeing is a massive increase of kind of working age adults that just aren't actively looking for work, and they don't know why. So they've commissioned a review of this to find out. So that's going to be really interesting to see what the challenges are in getting people into the roles, why they're not engaging in the workforce. So I thought that was quite cool. So there we are. So I think overall, not crippling, but obviously it's not great news. There's certainly more bad in there than good, and we are in a really tight time, so it's not suddenly going to be easy. It's not great news. Please do go check out all the other things they were saying about what they're going to do with this money, where they're spending it in health and social care and all that, because there were some really good points from what they're looking to do with that. But of course, I'm only talking to you about really the things that are going to impact you as the business owner. So check that, because I'll be really interested to see how it's affecting you at ground level as the year goes on. Well, that's it. I know it's been a bit of a long one, but there's a lot to talk about. So please do share this information with anybody you think needs to know, and I'll see you in the next one.